Welcome everyone. I'm impressed by your punctuality. It's really nice to see so many people today. Welcome to our SDG Academy organized by the Amsterdam Sustainability Institute on fascinating topic, the circular economy. Is our tax system ready? And I really don't know the answer, and I'm very happy that we have experts that will talk about this. So hopefully we can all learn about this very, very important question. My name is Philip Patbeck. I'm the director of the Amsterdam Sustainability Institute. I am a professor of environmental policy analysis, and I'm usually in Amsterdam, but today I'm actually in Bochum in Germany on a workshop with real people, not on Zoom. And so I was actually planning to use a break in my program to be here the entire hour and be part of the panel, but unfortunately, we had a slight delay, and that means I will have to rush off after a certain while. But I'll leave you in very good hands, because really when I was thinking about this topic, I had not much to say about it. I really tried to grapple with this. The one side I do understand, we have SDG 12, and it talks about responsible consumption and production. And it's related to one of the most important, fascinating topics that we have in the sustainability transition. That's the question of how can we make a linear system into a circular one? And that is really important because CO2 emissions, carbon decarbonization is important, but it's not the only problem we have. We basically have to decouple all of our productivity from the material use we have. So I get that side. But when I think about taxes, I get a little, I don't know, bad feeling. Probably I think I haven't paid my taxes, or I'm thinking paid too much taxes. I have a tax advisor who does that for me, so I have no clue. But I never put the two together. But the more I think about it, I realize, of course, the transition towards sustainability and the transition towards circularity does not only need policy and technology and innovation, it also needs good legal advice. So we have to think about what is a good structure for our tax system to help that transition. And I'm very happy to say that some people thought about that in much more detail, and those people are here today and will help us to understand that. So let me introduce our panelists and our speakers for today. And again, I'm very excited that you're here. All colleagues from the law faculty. Let me start with Jan. Jan Hoyer is an assistant professor of tax law here at the VU, and also a deputy judge at the Rechtbank Noord-Holland. Jan got a PhD from the VU, but also worked in the private sector. I think you were for a while a tax advisor as PwC, so you have also practical experience, which is, I think, very relevant in this topic, and you're continuing to do research on this question of the tax system and circularity. Now, very, very nice, Jan, that you're here, and a very, very warm welcome. Then Henriette Scholte is a graduate of international law from Leiden, international institutional law from Leiden University, and also Henriette got a substantial experience working in the real world, so to speak, before coming back to university and doing a PhD on the really interesting question on value-added tax. So I understand that Henriette is a value-added tax specialist. And so let us understand what that has to do with circularity. Last but not least, Albert Boma, who is a full professor of tax and technology, also here at the VU. And Albert has held also many positions in government, I understand, being part of various initiatives, but also been in Tilburg University. So that's really, really interesting, and I think it brings another dimension to the table. So what we will do is we will have a presentation and further input in the form of a panel, but then we also have hopefully a lot of opportunity for you to ask questions, how we can actually reform the tax system to help on the sustainability transition towards circularity. I'm looking very much forward to this. And so, Jan, I want to say the floor is yours. And I'm very, very sure that after this 1 hour, we all have learned a lot, and we'll hopefully know much more what the SDG 12, circularity, and taxation have to do with each other. Jan, the floor is yours. And again, welcome to all of you. I'm looking very much forward.
Thank you, Philip, for this opportunity to have this interesting topic discussed. I will share my screen just to put some slides on the screen. So if it, I assume you all see some slides. So what we would like to do, first I would like to to give some remarks and some considerations on just on the general topic, whether or not, or what is the relationship between the tax system and the circular economy. And then we will discuss a case that has been described in our white paper, a take back chemicals business model and the tax consequences on that. So I will start, well, first, I think with a basic question. The topic of today is the question whether or not our tax system is ready for the circular economy. Well, is that a relevant question? That's basically what I want to discuss first, because what does the tax system have to do with the circular economy? Why is it relevant whether the tax system is ready for such a circular economy? I think it's good to first to take as a starting point that the structure of the tax system should in principle be neutral. It should be independent of the nature of economic activities. The primary purpose of the tax system is to levy and collect taxes to finance public expenditure. And this should be preferably be done in a neutral way. The tax system is all too often used to achieve other goals. Financing public expenditure then becomes a secondary goal, and such instrumental use of taxes erodes the internal consistency of the system as such and leads quickly and also too often to inequality. And we really need to watch out for that. So we need to be careful for what we call instrumentalism. Nevertheless, the call for greening the system, and more specifically, the question of structuring the system in a circular economy, cannot be simply brushed aside. The urgency is simply too great. Given that urgency, all the resources governments have to guide economic choices must be considered. And the levying of taxes simply has an effect on people's choices. Choices in terms of investments, in terms of consumption, in terms of labor relations. And the system can, and in view of the urgency, must be optimally deployed to make the economy greener, to stimulate circularity. Well, in addition to this very pragmatic consideration, there are also more theoretical considerations to be made. With regard to the public expenditure evoked by environmental pollution and climate change, including combating climate change and climate adaptation, one can start from the polluter pays principle, one of the fundamental principles of environmental law. According to the polluter pays principle as defined by the OECD in the 1970s, environmental costs must be reflected in the cost of goods and services which causes pollution in production and or consumption. And such measures should not be accompanied by subsidies that would create significant distortions in international trade and investment. Well, a cursory look at this definition already makes it clear that the actual application of the polluter pays principle requires further specification. What is meant by pollution? What are the costs of pollution? And who is the polluter? Well, despite these inherent ambiguities, the polluter pays principle is seen as a fundamental principle of environmental law and policy. This applies, for example, also to European environmental policy. The idea underlying the polluter pays principle is described as follows in European regulation. I put it on the slide. Charging to polluters the costs of action taken to combat the pollution which they cause encourages them to reduce that pollution and to endeavor to find less polluting products or technologies, thereby enabling a more rational use to be made of the resources of the environment. Moreover, and that's very important, it satisfies the criteria of both effectiveness and equitable practice. So I want to focus on economic efficiency and equity and fairness. Let me see. Through measures based on the polluter pays principle, an attempt is therefore made to stimulate the development of non-polluting, or at least less polluting, production methods and technologies. A range of legal measures is available for this. In the literature, actually a distinction is made between measures that lead to internalization of external costs, on the one hand, and economic instruments that stimulate green behavior on the other. Examples of the first category are emission taxes, carbon taxes, and other forms of taxes that are used to price externalities. And the relative importance of these charges has so far been very limited, and it's therefore entirely right that, for example, the X-Tax project argues in favor of much more far-reaching forms of taxing virgin materials and the use of virgin materials and the production of waste. Examples of the second category of measures, economic incentives, include introduction of tradable emission rights, subsidies, and also tax benefits. Such measures have been taken in direct taxes to stimulate investments in environmental and energy assets. In Dutch corporate income tax, the MIA and the VIA and the VAMIL. Under very strict conditions, investments in certain very specifically defined business assets qualify for a tax benefit. Both forms of measures based on the polluter pays principles have drawbacks. I think we should consider that. For example, measures designed to price externalities are likely to distort market conditions if such measures are taken unilaterally or regionally. The economic effectiveness, efficiency of such fiscal steering instruments is very limited by leakage effects, the possibilities of companies to relocate their production. Unilateral measures thus have only limited effect. Additional measures are necessary to counteract this disruption. An example of this is the cross-border adjustment system recently proposed by the European Commission to prevent what is called carbon leakage. The import of certain products into the EU will be taxed. Furthermore, apart from this leakage problem, there's a danger that extra costs, additional costs that are charged will give rise to the idea that pollution has been bought off. The measures taken to implement the polluter pay principle will then not lead to a change in behavior. It's good to emphasize that such market-driven levies do not guarantee reduced energy consumption and/or reduced waste production. If the levies are too low in relation to the financial benefit, the parties will not be inclined to adjust their behavior. And if the charges can be passed on to users without any problem, for instance, in a monopoly situation, there will be no effect either. And the disadvantage of providing subsidies or introducing tax incentives is that ultimately it's not the polluter who pays, but the taxpayer. So introducing these types of incentives should be also carefully considered. I mentioned that there are two basic, very important criteria for using this polluter pay principle in tax. One is the economic efficiency, but also, secondly, arguments arising from equity, from fairness. There's also an ethical, moral dimension on that. When properly worked out, the principle does justice to what I believe is a widespread feeling that whoever is responsible for the pollution must also take that responsibility and pay the cost of that pollution. So the polluter pays principle is, in a sense, an equity or a fairness principle. And I believe that arguments of equity and fairness should also be taken into account. By levying taxes, the government infringes on personal property rights. Such an infringement must be justified. not only justified in a formal sense, because it's well regulated, but also in a more moral sense. The cost of measures to deal with climate change and the effect of pollution must be fairly distributed through the tax system. That's why greening of the tax system, as an expression of the polluter pays principle, deserves to be high on the agenda. The question of whether the tax system is ready for the circular economy is highly relevant. We must ensure that the bill for climate and environmental problems is passed on to those who can be regarded as polluters. This benefits the internal justice of our tax system. Whether the tax system is ready for the circular economy is therefore a relevant question. The problem is urgent. One, market failures can be prevented by means of taxes through pricing externalities. That's the second. And in addition to that, it's right that polluters pay for the pollution they cause. That's one part of my introduction. Now I turn to the question whether or not the current tax system is ready for the circular economy. And I'll do that by using the well-known 10R model of circularity with different strategies ranging from, let's say, ranging from recovery to refuse, well, the 10 R's are on the screen, but I would like to use a picture that my VU colleague Piero Mossaletto provided in a paper that he wrote in 2020 on the interrelationship between the 10 strategies of this model. And I think that's a very useful starting point when evaluating the degree of circularity in the tax system, especially from a corporate tax perspective, so tax on the profits of companies. I think because of the fact that we are in a transition phase with regard to circular economy, I think it's good to distinguish two questions. One is, does the current system impede the transition? And secondly, can tax measures be devised that would stimulate the transition? Well, using this model, this 10R model as a starting point, I have a few comments. One, the diagram clearly shows that the transition to a circular economy and also to a circular business model starts in the design phase. This actually applies to all underlying circular strategy. It's the first goal is to rethink the model, to rethink a product. The rethinking of that is crucial. It applies for the design of specific products, for business models, how to come from selling products to providing services, how to come to radical changes in the supply chain. It has to be developed first. And the question is whether or not any fiscal innovation facilities, R&D incentives could be used to promote this rethinking, to this redesign. Currently, in the Dutch Corporate Income Tax Act, there are some R&D facilities, some R&D incentives, and we also have some R&D incentives in payroll tax, the WBSO. However, these facilities are not specifically aimed at innovation within the circular economy or in circular business model. For instance, the operation of the wage tax incentive is very limited and also focuses on only focuses on the development of technical physical products, on physical product production processes or on software. Hence, the facilities do generally not apply to innovation in the design of existing products or business models. So I think that's one thing to consider. Secondly, if you look at the strategies R3 and R4, reuse and repair, and we take that into account when considering the introduction of business models, product as a service, so not selling products, but provide services instead. The introduction of these types of service models have major consequences for the composition of a company's asset base. It means that products are no longer sold, so it forms still, these products are assets on the base. We have to provide these products through forms of lease. And the problem is that the tax qualification, the tax classification of leases is by no means always very clear. Payments under a lease agreement can be considered rent or interest. All kinds of deduction restrictions apply to interest. Interest may be subject to dividend or to withholding taxes in cross-border situations. So the introduction of a product as a service business model may have major impact on a company tax bill. Third, that brings me to investments in circular assets. And it appeared also from a Corpus 8 report published yesterday that such investments are significantly higher than investments in comparable but normal business assets. And because of the depreciation rules in corporate taxation, those extra investments in circular business assets cannot be depreciated on. The amount of depreciation depends on the residual value of an asset and also the useful life of an asset. And with fully circular operating assets, the residual value will be much higher and the lifespan will be much longer. So through the income tax, through corporate income tax, the taxpayer actually contributes to the investments in linear business assets, such as normal buildings. And suppose that the use of energy and virgin materials would be heavily taxed, so that environmental effects are really priced in, then the depreciation regime will still give an investment in an ordinary business asset a more favorable treatment. Three examples where the transition to the circular economy from a corporate tax perspective leads to some problems. That brings me to some observations, how to remove these obstacles, and on the question whether or not the corporate tax system is in line with the fundamentals of a circular economy. First, we should have clarity about tax consequences of forms of leasing and other contractual relationship that entail product as a service models. This also applies not only to corporate income tax, but also, for instance, to real estate transfer taxes. Secondly, it may be considered whether investments in circular business models can be stimulated by adapting the existing innovation and R&D incentives. I would believe that the money we currently invest in innovation should be used for investing in circularity. This also applies to an incentive such as the wage tax incentives, and perhaps even to a 30% facility also in wage tax. So we should reconsider the purpose and the focus of current R&D incentives. And thirdly, and that's basically a question. If we really want to apply polluter pays principle in our tax system, shouldn't we make a rate differentiation in our corporate tax? Should we design a corporate tax, maybe at a European level, that effectively taxes profits from circular activities lower than profits from regular or normal activities? That's what I wanted to say as an introduction to this this seminar and this issue of the tax system and circularity. We will now discuss based on the take back chemicals business model some tax issues. And Albert, I think I pass on to you to have an introduction on our study.
Okay, thank you, Jan, for this overview of the tax landscape and the principles involved. Yeah, now the white paper. Mid-2021, de Vrije Universiteit Amsterdam completed a study into circular business models. And the research was conducted together with EY and Royal Haskoning. And the aim was to find out whether taxes stimulate or, at contrary, limited the introduction of circular business models, or whether it makes no whatever difference what business model you apply, circular or linear. Our research focused on the take back chemicals model. And the idea is that this model is a good illustration of possible tax effects that may be involved. And Jan will explain this model in more detail. And then we are going to discuss the corporate tax issues and the value tax issues. Okay.
Yeah, so basically, I will be very short, also given time issues. The idea is that in the phase before introducing the take back chemicals model, there was a producer of a specific chemical that is necessary in the process of drying chlorine. So this chemical is sold by the producer to the customer, it's used, and then it's spent. And the idea is that the process is changed in the way that the material is no longer used, but is really is not sold, but is kind of leased to the customer, is used by the customer, but is later on, after it is used, transported back to the producer, kind of revised and then used again. So the idea is that we don't have anymore a production of materials for the purpose of selling the material, but the introduction of a service. And obviously the positive effect is that the producer can optimize the effect of the substance and use it most economically. That's very short, I think, the idea. So it moves from a business model from selling products to a kind of using products, leasing products as a service. Henriette, I think this suffices for discussing the VAT aspects of this model, isn't it?
Yes, please. Before going into the VAT aspects of this model, Jan, could you shift the black? Yes, to black. Thank you very much. I would like to make some general comments on the impact of VAT on circular business models. In the diagram you see before you, you see so the blue squares that represents the circular flow of materials as they go through a circular business model. And what is apparent from this circular flow, that it is different from the linear flow of materials from use of products to the consumer, back to recycling and back to production phase. In short, it actually represents the extension of the lifespan of a product and of materials through the phase of production and use by the consumer. In short, it is due to the time, I will actually make it quite short. Each square represents an activity, a circular activity, which represents a circular activity within a circular flow of products from the production to the sale, to the recycling, to the production again. First, normally in a linear flow, actually starting from the top, we would go to the second level, to the sale lease of a product, which is taxed with VAT. And then mostly the product would then actually end up out of the circle into a garbage bin, into a landfill or an incinerator installation. Because luckily we use it for the production of electricity. In a circular flow, one would extend the use of the product as long as possible by repairing, which is a VAT tax activity, then refurbishing the product, so to keep it update, which is a VAT tax activity. Take back the product and use its part to remanufacture or even resell the product, which is again a VAT tax activity. And then if there would be an end of life, then recycle the product so it can be used as for materials for production of a new product. And we have a circular flow of activities, which is taxed in each phase, which is clear that in difference to a linear flow of materials, which will be taxed once, maybe twice. With a circular flow of materials, you see all kinds of VAT tax activities throughout the lifespan of the product, again to the fact that the materials are again used in production and are again taxed in a new product, taxed with VAT. Can I have the next slide, please, Jan? In the paper that we presented, you see that there is we talked about a circular use of actually an auxiliary material in a chemical process being sulfuric acid in the drying of chlorine for the production of PVC. The supplier of the auxiliary materials in the first phase actually supplied the product to the producer of PVC for the drying process, and then the auxiliary material was actually disposed of. In that, and when there is a circular use of material, the material is not disposed of, is taken back by the supplier, and then cleaned, recycled, and used again. So the VAT situation is that every time you have a supply of a good, or you have a supply of a service. And that makes a difference in this situation, and we'll go into that in the next discussion. But over and over, VAT is being paid. The advantage in this B2B situation, business to business situation, is that VAT is deductible. However, there are negative consequences to this VAT charging over and over again, is that it is a compliance problem. We have to see if it qualifies as supply for service or supply of goods. The liquidity problems, that is the liquidity that has to be paid. You have to pay the VAT, then you have to deduct the VAT, and there's always a time span between between getting the VAT that you have paid back, and that leads to liquidity problems and even sometimes to financial problems. And then administrative procedures that have to be followed, especially in intercommunity trade and in case of import, export of the chemicals across borders. Going out of the case of the white paper and to a B2C situation, we see that VAT paid by the consumer is not deductible. And that means that the VAT charge influences the consumer price. Because of competition on the marketplace, there's only a possibility to charge a maximum consumer price to your consumer. And you have to take the VAT out of the consumer price, and that you have to, you're liable for payment to the tax authorities of those VAT charged. The consequences of a circular business model, it's A, more labor intensive, but B, it also prices in externalities as pollution, biodiversity loss, and resource depletion, for instance. And as a consequence, those prices are higher, so more VAT is charged. But then again, we also saw in the previous slide that there are a huge number of, much larger number of VAT taxable transactions. And that means that over this higher price, VAT is charged over and over again. And there are questions whether that is ethical. And those questions are asked by entrepreneurs, but also in the academic field. Thank you, Jan.
Yeah, so I think I can be brief on the consequences of this business model for corporate income tax purposes. I think I mentioned all these items already. So we have to consider R&D incentives in the implementation phase, in the development phase, and surely, most certainly, the incentives won't apply in this case. So I think from a policy perspective, it should be reconsidered whether or not these incentives should apply in investing in circular business models. At the operational phase, we have a discussion on how to classify the lease agreement, whether or not it's operational or financial or something in between. We have to recognize who is actually from an economic perspective, the owner of the assets involved. That is very important for corporate income tax purposes. There are some, if the structure is applied cross-border nations, then we have some transfer pricing issues and withholding tax considerations as well. So basically, that I can be very short on that, and I think this suffices for the moment. Albert, I think I hand it over to you or to Nela, I don't know.
I have a question for you, Henriette. Jan mentioned the cross-border effect and transfer pricing issues. Are there also consequences for the value-added tax if there are two parties involved?
Absolutely. If it's an intercommunity trade, so it means that the supplier is in another member state of the European Union than in the member states where the producer is located, we do have some consequences that I would like to comment on. One of the consequences is, of course, the obligations that you have to actually list the transport of the chemical across borders. One of the fundamental questions is whether is it a supply of a service or whether it is a supply of a good. And this problem relates to, first, from a civil law point of view, it probably will be seen as a supply of a service. And in the sense that the supplier and the purchaser are actually agreeing with one another that the ownership of the chemical will stay with the supplier. On the other hand, the chemical is transported to the purchaser and is actually used almost up in the process, and it cannot be used unless the supplier actually completely cleans it up and makes it usable for a new supply. So the question is this actually a supply of a good or is it a supply of a service? Personally, I would say it's supply of service, including the recycling process. But I can imagine that in case of cross-border transaction, one tax authority would qualify it as a supply of a service, while the other would qualify it as a supply of a good. And then you have two different tax authorities that don't agree on the qualification, which would lead to one, where is the place of supply? Is the place of supply of a good? Then it is there where the supplier is located. And is the place of supply of the service? Then the service is taken by the purchaser, and the taxation shifts towards the liability for taxation shifts towards the purchaser. So we have actually a problem then with liabilities for paying the taxes and how to actually declare the taxes and how to do your ICT listings. So if we actually go across borders out of the European Union, then even customs problems come into effect, which are actually addressed in our white paper. So I would actually point to the white paper in order to find the answer to those questions. But you will see there are a lot of administrative obligations and other people that get involved in the process in order to be able to do that in a correct manner. Thank you, Albert.
Okay. Are there any other questions so far?
Neely, are there any questions from the viewers?
Yeah. Yes. So we just had one. So Jarek, finds very interesting, but he also asked you, do you advise the government based on this research? And do you think this will have an effect on the system, on the current tax system soon?
Whom would you like to answer?
Yeah, I've heard Jan say something about this, so
yeah. Well, yeah, I think so. We sent our white paper to people from the Ministry of Finance, but also from the economic part. And I discussed with some of the people there, and they are very interested. And I think that's it's on their radar as well. The problem is actually that there are a few things that should be considered. It's basically for, let's say, for customs, for VAT, but also for corporate income tax. The EU is very important. So we cannot do in the Netherlands anything without any consent at EU level. And that makes it very important very difficult, obviously. And secondly, I think the awareness is not been sufficiently there to really look into this issue. I think it slowly starts to grow, but there should be some political awareness as well. And they have other issues to deal with from a tax perspective at the moment.
Do you know about researchers or other initiatives in other countries within the EU pushing for something similar?
Well, I think I very briefly mentioned. I think it's worthwhile to mention this again explicitly. The work of the XTEX project. I think that is very important, and they kind of wrote a delta plan suggesting to introduce a high level of environmental taxes, so both on energy and the use of virgin materials, and also on waste, by shifting the tax burden from, let's say, tax on employment to taxes on environmental issues. I think that's a very important plan that has been discussed in The Hague, but also in Brussels, and receives lots of attention. I think it's worthwhile to do something with that. There are good ideas in that. It may be too, let's say, too ambitious to implement it at once, but you really can use elements on that, in my view.
Yeah, and we have another question related to that, about the relation between the Dutch tax system and the EU level agreements. So I think that probably links to, yeah, how does this affect each other, or yeah, what's the relationship there?
Well, very basically, corporate income tax is a responsibility for the member states. So, however, they have to use that that power, obviously in accordance with EU law. And there are some EU measures that limit the actual opportunities there. For instance, for example, the state aid rules. So any measures in corporate income tax cannot be against state aid, European state aid rules. That is an issue. I think that should be solved at the European level, because obviously creating a circular economy is one of the very is high on the agenda of the European Commission as well. So I think they could easily regard the state aid rules not applicable to any measures stimulating circular economy activities. But that is an issue. And VAT is actually a European tax.
Absolutely, yes. I would like to, that was just what I'd like to add. VAT is a European tax, and therefore changes in the VAT laws also have to be made at a European level, which is very complicated and a very long process before you get those changes implemented into national laws. However, there are some possibilities that just came along for tariff differentiation, rate differentiation, for particular possibilities to also green up the system. We have seen in the government new cabinet proposals the zero tariffs for vegetables, for instance. But there are also possibilities to use that for circular economy if that would go through at the European level. And we have seen that also in the Green Deal being mentioned, to use tariffs, rate differentiation for our strategies like repair and refurbish. That would be a great advancement, at least for those entrepreneurs in circular business models will use these particular strategies to provide in a circular supply of a good to or of service to consumers.
Okay, great, thank you. Then also linking to that is another question. If the distinction between the supplies of goods and the supply of services, if that is not, if that is making it impossible for the VAT to stimulate circular economy. So yeah, this distinction between supplies of goods and supplies of services.
Well, for VAT purposes, the supply of goods and supply of services in a national level doesn't make not so much difference in a sense, unless it is exempt, that supply of a service is exempt, or that is a different tariff, especially some tariffs, some services are lower tariffs than supply of goods. But in general, it becomes, especially in business to business relations, it becomes interesting if it's cross borders. Then other rules apply, and those rules especially to how to declare, who is liable for the payment of the tax. That can be very important, especially compliance. And certain countries, their tax authorities are very strict and very firm. And if you don't comply the rules in a strict manner, that you can easily run into sanctions and charges which are very high. So we have only not that much sanctions, but but the other countries are very strict in the application of the rules. So compliance issues are very much on the forefront. And because circular business models are different and lead to qualification problems, and whether it is a supply of a good or a supply of a service, and the differences in liabilities and rules of how to declare and what to declare, you have the possibilities in running into surcharges, which can add up.
Yeah, okay, then talking about compliance, Alex asked about the tax evasion problems, or yeah, if this is an issue you've looked into. I know that Jan has worked on this at least, so I don't know if you've yet brought this together. Maybe you have some thoughts about that as well.
Could you?
So the question is, yeah, if there's yeah, how about the problem of tax evasion or tax avoidance, if how this could yeah, inhibit or not the circular economy?
Well, let's say that the issues I recognized and I discussed relating to corporate income tax, I don't think that specifically the issues of tax avoidance and tax evasion relate to circular activities. Obviously, a circular company, I don't like it, but they could use tax evasion or tax avoidance schemes as well, just like other companies could. I think that's different. That's really a different topic. I think there are very important measures have been taken to avoid, well, obviously tax evasion, but also tax avoidance within the OECD anti-base erosion and profit shifting program. That I think that will work out quite nice, although there should still be very much work to done on that level, but I don't see any direct relationship with circular economy discussions.
Yeah, okay, thank you so much. Well, we're getting to the end of our little event, SDG Academy. So we have time for one last question, and yeah, so Alex also asked about the value of nature, or the yeah, maybe Alex, you could discuss, ask this yourself. I don't, yeah, what's like your precise question on this?
Yeah, sorry, I'll just try and be more specific. So having studied both ecological economics and environmental economics, the difference being the substitution of natural capital. There's a big discussion around whether we should be inherently valuing nature. And since we're talking about value added tax and the difference between goods and services, I can't help but think of ecosystem services. And for me, that seems to be the root issue that I'm not really hearing being discussed, because that was for me the connection between tax avoidance and evasion on one hand and the circular economy, because logically a transition towards a circular economy at all scales of our society, which arguably is what is necessary, would entail whole sectors needing to move from the way they are currently structured, which is redistributing profits based on the derivation of natural capital, if you see what I'm saying. So we need to think more deeply about that. So that was where my question was coming from. It was also a reflection. So apologies for the lack of clarity there.
Well, from value-added tax point of view, I totally agree with you that in the sense that what you're saying, the pricing in of externalities like biodiversity loss, resource deprivation, all this pollution, CO2 pollution, climate change, they for linear productions they are most of the time not priced in to the product. The question is whether you can use VAT as an instrument to actually get to this shift from linear to circular production. I'm more in a sense, I think there is one way you can get to that and use VAT somewhat, in my opinion, and that's my personal opinion, is that to create a level playing field. And that is to take care that circular products have a level playing field with linear products. Now, VAT rates can be used to that extent. There's some discussion about it, but there is also some ideas in the academic world to go towards this level playing field by using VAT rates. Another way to get to there, and that is not much discussed in this particular segment, is environmental taxes. There's also a possibility to actually, by means of environmental taxes, to get to a level playing field so that prices, that externalities will be priced into the price of the product. So I think it's a very good question, Alex, and thank you for asking that.
Yes, and thank you all for answering all these questions, for giving these insights. And yeah, we'll forward the white paper that you've written to anyone who's interested. It's in Dutch. We've made our sort of own English translation. So if you want to have a summary, we also have that, although it's unofficial. So I guess for any further details, it's best to reach out to our three speakers. Yeah, so if you're interested to get in touch, send us an email. Chantal has posted our contact details in the chat. And yeah, also if you want to stay up to date with the Amsterdam Sustainability Institute, you can just sign up for our newsletter. And yeah, of course, always reach out to us and yeah, let us know about your ideas. And yeah, with that, I'm closing this very nice SDG Academy about SDG 12. I want to thank you all speakers for your contribution, and all participants for taking the time to be with us today. And yeah, hope to see you soon at our next SDG Academy. Thank you very much.
Thank you.
Thank you.